But, I mean, when we talk about it, the underlying data is still strong, and the Fed clearly echoing that sentiment. The market's been closely watching trade developments, but we do have a glimmer of hope. After a roller coaster week, the Atlanta Fed raised its GDP now forecast to 2.2% for the third quarter, higher than many economists were actually predicting. And it comes after U.S. retail sales surged above expectations in July, climbing a seasonally adjusted 0.7% from June. So, Jack, you point to Walmart's numbers there. That's true. I mean, this is another one of those major retailers. And as long as those retail numbers are still strong, and you do have U.S. consumer confidence, you do have to think that something there would have to change for this picture to really be worse than I think a lot of people have been sounding the alarm on.
Right. Well, consumption is 70% of the domestic economy. That's something that you have to keep in mind. The consumer is really what boosted GDP that beat expectations in the most recent quarter. So right now, we still have a pretty good economic picture. And recessions are 2 consecutive quarters of contractions. And right now, we're still seeing all of these estimates pointing to growth. So it's not something that looks like it's happening, at least in the very near term.
Yeah, what would it take for you to really change your position? I mean, what would be that first thing that you're looking at if it's not the yield curve inverting? What's something that would catch your eye here?
I think it's the protest. I think over in Hong Kong right now, people aren't giving this a serious enough look. Mm-hmm. There's a lot of the Chinese economy that runs through Hong Kong. People go there, that's where they go for quality. That's where they go for safety in Asia. And so, this thing is getting worse and worse. You're up to 25% of the population that could actually be out there protesting or out there protesting. That's a lot of people. And so I think there's a lot of heat behind that. But economically, from the U.S. standpoint, like today, the housing starts number came in a little bit down, but you see the future purchases of homes looks like we're still there. And as long as interest rates can stay low enough where people can go out and continue to buy homes, and the real estate market can continue to stabilize, you see the consumer spending money. And I think all those things combined are not going to put you in a deep recession unless we see some inflation. But I think the Fed can control that, at least through the election.